Hi, this is Paul from globaltradingsoftware.com, and this is a gold futures trading tutorial. I'm going to be using the xBrat range breakout, the xBratAlgo and the xBrat manager. I want to talk about different time frames and looking about and understanding the behavior using these different trading indicators, the xBrat trading indicators. So first of all, I'm going to go to the 5-minute time frame, and I'm going to look at the range breakout and what it tells us. So more interested in this US Open range here. So one of the things that happens is when we get that first initial range and we use the 5-minute time frame, we set it up so it actually it identifies that first candle. So the label is green, so we're only looking for longs here because the bias for that range for that candle is still bullish, even though it's a red candle. So only looking for the shorts, especially when you look this previous support zone just here. So we let this trade go. We get some data come out on the Friday, we hit support, and we start to come back up again. I've just put that vertical line in here because I want to show you on a different chart on a smaller time frame the xBratAlgo. So if you've only got the xBrat range breakout, you see the opening range goes green, so you're looking for longs, and this would be your entry breaking out of the range long here. Okay, I'm going to colour that in green. So you've got an entry at around about 1835. 1835 is your entry long for the xBrat range breakout here. Then you simply use the manager, this green ribbon here, to understand the behavior and finally get out just before the close for the weekend. And that trade was worth at the close 256 ticks, $2,500 per one contract. So you're not necessarily looking to trade straight out of that opening range. It defines the range and gives you the bias. Remember that the data, the label is green here. The label for the data is yellow. This indecision, it comes back down. When it comes back through that opening range, the range turns green. You're looking for a breakout to the upside. It breaks out to the upside, comes back and tests that opening range as support, which is, it does the case a lot of the times. The manager's telling us to stay in and stay in and stay in. 256 ticks. Now, if you're like me, you look at multiple time frames. So I've put that vertical line just here because look at this on the 1 minute for gold here. We get an xBratAlgo signal for a 6-star buy signal here. So this is when it's come back down to test that support, and on that lower time frame we can get an earlier entry. We can get an entry here. What we do is we look for the signal candle and we go one tick above. That's it there. So I'm just going to put that in a slightly different type of dash line because we'll go back to the larger time frame in a minute. So again, that the xBratAlgo has, for a 6-star buy, has 12 points of control. So if all those 12 points of control are ticked in the box and they're good to go, we go for the long. We don't short into support. We don't short into support. This support has been there quite a long time. Okay, we don't short into support. So even though there's 6-star sell signals there may be a little scalps, but we don't short into support. When we're going along here, we got lots of fresh air up to that next pivot point. Look where that next pivot point is on the 1 minute, right next to where we went out. That was the opening range. So I'm just going to put that in a different color there. So all the time we're understanding the story. This was our opening range here. We came back down, we've pulled back up. Now on the 1 minute we've got what we call fresh air. We've got lots of distance between the entry and that top of that opening range. So here's the thing, we can actually add contracts to this. So we can add one contract, trade one contract at 1830.04. okay, now we're looking at all these multiple time frames. So we then look at this on the 5-minute time frame here, 1835, we say to ourselves, right, okay, we're in that trade. The entry was down here. From the 1 minute. This is how to trade this and maximize your profits. So we've got this entry down here from the 1 minute. The bias is turned green. We're looking to add a contract when it breaks out of there, but we want to make sure we're risk free. So you see how this pivot comes down the 5 minute here and then goes through to test the top of there. So let's make that risk free with our trailing stop. We've got no risk on at that stage whatsoever. If it can't break out of that range and it comes back, we've lost nothing. If it breaks through, we add a second contract at that point. Okay, the stop for both contracts would still be at that point here. Okay, pulls back, finds support on the top of that range, and then just keeps going for the rest of the day. That earlier trade with the xBratAlgo, and this is why the xBratAlgo is a different strategy, different market conditions to the opening range strategy. So by combining them both, we've maximized profits, you know, with 300 ticks plus. Okay, now this happens very, very often in that you can combine the strategies. You can combine the xBratAlgo and the xBrat range breakout to get some really great trades and add contracts and maximize those profits. So instead of trading one contract just out of there, we remember, go back to the 1 minute. We got a 4 and a 6 star xBratAlgo signal on the 1 minute. That was our early entry. That was signs that this thing was moving away from that support. After that opening range, it tried to go down, it ran out of juice, more buyers in the market. The xBratAlgo spotted that, got you in early. It then makes its way up to the top of the range, and you just put another stop limit order in. When it breaks that range, you add another contract. When you do that, you make the first contract risk free, and this is where you are now. Now, a very, very easy way to say how much would I have won is, remember, when you have one contract at this price, okay, at 1830.04, you want to add another contract here. What it does is dilute that position slightly. So you're adding one more contract. Your average holding position is halfway. So, you know, roughly around about here. Okay, this is where, when you get your second contract, this is where your average holding price is for both contracts. Okay, your stop is only down here, so your risk is very limited, your reward is massive. So now this is how you can work out when you're back testing here. I used the manager, the ribbon remained green even on these pullbacks and flat where the dots were below average. This is what these dots mean, below the candles. That was a sideways action with below average volume. It was basing, ready to push, a bit like this pullback here, and then it goes again. Then we get lower than average volume pullbacks, lower than average volume pullbacks, and we can close right at the close. The thing to do then is, you know, when you're back testing this strategy and combine them together, have a look. 280 ticks times 2 contracts. Okay, so you know, in reality, that's 2,800 times 2. That's $5,600 trade on the Friday there, for having both indicators running. Different time frames. The time frame is always the 5 minute for that xBrat range breakout, and then you want to be less. You want to be looking at 1s and 2s and 3 minute time frames to see if you can get in earlier, or even just get confirmation from this xBratAlgo, and then go back to that 5 minute time frame to manage that trade, and that takes you all the way into the close. Hopefully this helps. What I try and do is look at different market circumstances and try and pull in you know, at least 2, maybe 3 of the xBrat trading indicators here, so that you can understand that there are multiple trading opportunities if you combine these in the right way. And I'd make lots of these educational videos so you can understand how to do that. Hopefully that helps. Speak to you all really soon.